I told you 5 is the invoice price, 1 is the profit, 4 is the cost price. 4 is the cost price, 1 is the profit. Start from 1/4/2010 to 31/3/2011. 11, 12, 1, 2, 3. How many months stay? 6 months. Minus depreciation. Then checks into branch. This is the expenses met by the head office on behalf of the branch. 5, 6 are 30. 4 remaining. 5, 8 are 40. Followed by 30, 68,000. Hello, my dear students. I am Dr. B.S. Subramaniam, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. I am going to hand Financial Accounting 1 of first semester BCom regarding the branch accounting is considered. I told in the last session, so many times I told, you have to calculate the stock reserve for 4 items, 1 on opening stock, 1 on closing stock, 1 goods sent to branch, 1 goods returned by the branch, which are the 4 items in the stock reserve. Stock reserve means which includes the profit. 1 on opening stock, 1 on closing stock, 1 goods sent to branch, 1 goods returned by the branch. We'll see the problem now. This is a branch you have got. So Rajesh Traders Bangalore have a branch at Mysore. At Mysore, goods are invoiced to branch at 25% profit on cost. If the cost is 100, profit is 25, 125 is the selling price. Prepare the branch account. Balance on 1/4/2010. Year ends on 31/3/2011. It's a financial year. Start from 1/4/2010 to 31/3/2011. So stock at invoice price 3,40,000. This invoice price means which includes the profit. Opening debtor, opening furniture, opening petty cash, opening outstanding salary, it will come on the debit. So this will come on the debit side of the branch, debit side, this will come on. Goods invoiced to head office, 18 lakh, that will come on the debit side. Cash sale, that will come on the credit side. By bank account cash sale, credit sale, that will come in the debtor account. Goods returned by the branch, that will come on the credit side. Cash received from the debtor, this is for your debtor account, and the branch account credit side. By bank cash sale, cash received from debtors. Then checks sent to branch, this is the expenses met by the head office on behalf of the branch. 1 for salary, 1 for rent, 1 for insurance paid up to 36/2011. Year ends on 31/3/2011. 3 months prepaid is there. Petty cash sent by the head office 7,500. Purchase furniture. Head office purchase the furniture on behalf of the branch. 1/10/2010 they purchase. 1/10/2010. 10, 11, 12, 1, 2, 3. 6 months it is going to remain. For 6 months you have to calculate the depreciation. Goods returned by the customer means sales return. Then bad debt will come in that what's called debtor account. Petty expense paid by the branch is 8,000. Closing stock is 3,80,000. Depreciation at 10%. Now you have to calculate the stock reserve. Calculation now. Stock reserve. Cost plus profit. Cost plus profit is equal to invoice price. Cost is 100. See the profit percentage here. Your profit is 25%. It is 125. Therefore, profit 25 by 125, nothing but 1/5. I told you 5 is the invoice price, 1 is the profit, 4 is the cost price. 4 is the cost price, 1 is the profit, 5 is the invoice price. So it includes where 1 on opening stock, 1 goods sent to branch, 1 goods returned by the branch, 1 closing stock. Calculation of stock reserve. On stock reserve, Number 1, on opening stock. What's the value of the opening stock here? We started on 1/4, 3,40,000. 3,40,000 into 1/5. So 5 6 are 30, 4 remaining, 5 8s are 40, followed by 30. 68,000. 5 6 are 30, 4 remaining, 5 8s are 40, followed by 30. 68,000. On number 2, on goods sent to branch. What's the value of the goods sent to branch? See that goods invoiced to branch is 18 lakh. 18 lakh into 1/5. So 5 3s are 15. 3 remaining, 5 6 are 35. 3,60,000. What that is a profit. Now, number 3, on goods returned. On the goods returned, what's the value of the goods returned? Goods returned by branch, 40,000. 40,000 into 1/5, 8,000. Last one, 4th one, on closing stock. On closing stock. What's the value of the closing stock? 3,80,000 into 1/5. 5 7s are 35. 3 remaining. 5 6 are 30. 76,000. So all stock reserve goes in favor of profit. Now, you got an opening debtor. Do not have the closing debtor. You can have the debtors account here. Total debtors account. To balance brought down. What's your opening debtor? See that? Beginning of the year, balance of debtor 2,60,000. 2,60,000. Cash received from debtor, credit sales. See that? What's your credit sale here? Credit sale is 9,63,000. 9,63,000. So much money we have to receive. So how much received from this is last year we have to receive how much money? 2,60,000. This year credit sale is 9,63,000. Now how much cash received from customer? Here cash received from debtors 9,18,000. By cash received from debtors. Here cash received from debtor 9,18,000. See that any bad debt is there. Bad debt is 4,000. Goods returned by the customer is 6,000. So bad debt 4,000. Sales return 6,000. Any expenses paid by the head office, see that? So furniture, then goods returned by the customer over sales return, bad debt, petty expense paid. Any expenses paid is there? No. Bring out the difference. Add the figure. This is 9,630. 3, 2, 1 plus 9, 10. 12,23,000. 12,23,000. So total money to be received is 12,23,000. How much you received? 12,23,000 minus 9,18,000 minus 4,000 minus 6,000 is equal to 2,95,000. Closing. Check this. 0, 8 plus 4, 12, 18, 23, 2 plus 1, 3, 9 plus 9, 12, 1 plus 2. Balance carried down. This is your closing debtor. Then this is what 1, 2. Calculation of closing petty cash. Calculation of closing petty cash. What's your opening balance? See that. What's your opening petty cash? Your opening petty cash is 2,700. Opening petty cash 2,700. Check the figures. Opening petty cash 2,007. How much received from the head office? Check receipt. Head office for petty cash 7,500 plus petty cash received 7,500 from the head office. 0, 0. It becomes. So at the beginning of the year, you got 2,700. How much petty cash received? 7,000. What is the total amount available? 10,200. How much amount spent? Petty expense paid by the branch 8,000 minus expenses met by branch 8,000. Balance is 2,200. Closing. Closing. You got the closing figures. Regarding the furniture. So what's the opening value of furniture here? If you see that, opening value of furniture 1 lakh. Calculation of closing value of furniture. Opening value. Opening value of furniture 1,20,000 minus depreciation 10%. Minus depreciation 10%, it will come 12,000. It becomes 1,08,000. Old. New furniture. New furniture. Purchase on which date? See that. New furniture purchase on 110. 110/2010. New purchased. 110/2010. What's the value? What's the value of furniture purchase? 30,000. 30,000. You purchase on which date? 110. Year ends on 31/3/2011. 10, 11, 12, 1, 2, 3. How many months stay? 6 months. Minus depreciation 30,000 into 10 by 100 into 6 by 12. It is going to remain only for 6 months. 30,000 into 10 by 100 to 6 by 30. 10% of 30,000 is 3,000. Half is 1,500. Balance is 28,500. This is for new. This is for old. This is for new. It is going to remain for 6 months. This is going to remain for 1 year. So you have to put into format now. So branch account. Which year you are ending? Start with 1/4 means 31/3/2011. 31/3/2011. 2. Balance brought down. Opening balance. You'll go one by one. What's your opening value? See that. What's your opening stock? 3,40,000. Stock 3,40,000. This is your opening stock. Then, see that what is next one? Your opening stock is over. Opening debtor. What's your opening debtor? 2,60,000. Debtor. 2,60,000. Then furniture. Opening. 1,20,000. Then what is the next one? See that. So here, this over, this over, this one. Opening petty cash. What's your opening petty cash? 2,700. Then outstanding salary. Opening. What's the value? Outstanding salary. 3,500. Then goods invoice to branch. Goods sent to branch. I think it is 18 lakh. Goods invoice to branch. See that? 18 lakh. Goods invoice to branch. I will explain. 18 lakh. Then what is the next one? See that? Goods invoice to branch. So this over. Then we'll come back. Goods invoice to branch. This over. What is next one? Goods returned by the branch. Goods returned by the branch. Goods returned by branch. Goods returned by branch. Goods returned by branch 40,000. By bank account. Here we get two items. One is the cash sale, cash received from debtor or customer. What's your cash sale? See that. Your cash sale is 7,50,000. Cash sales. 7,50,000. Cash received from customer. Cash received. How much cash received from the customer? See that. Purchase. Cash received from debtor 9,18,000. 9,18,000. Add the figure. 3,0,8,6,16. 9,18,000. 30. This is 7,50,000. 7,50,000 plus 9,18,000. 16,68,000. 0. This is 0. So 9,18,000, 7,40. Here no 30. So 7,50,000, 750 followed by 30 plus 9,18,000, 918 followed by 30. 16,68,000. 16,68,000. Then any expenses paid by the branch here, to bank account, expenses paid by the branch. We'll go one by one. What are the expenses are? Checks into branch for salary. 50,500 salary. 50,500. This is the paid by head office. Salary 50,500. Then this over. Rent how much? 30,000. Rent 30,000. For petty cash, how much spent? For petty cash, they've given. For petty cash, rent for petty cash 7,500. Insurance Insurance. How much they paid for insurance? They see that insurance paid up to 36 2011. Year ends on 31/3. How many months more? 3 months more. Insurance 6,000. Add the figure. It is 50,500 plus 30,000. 50,500 plus 30,000 plus 7,500 plus 6,000 is equal to 94,000. Here. Regarding the insurance, 3 months prepaid insurance. That is for 3 months. How much paid for the insurance now? Actually, they paid for insurance 6,000. They paid up to what it is in 3 months. Insurance 6,000 into 3 months more, 3 by 12. 3 4s are 4 1s are 4,500 paid extra. Then, so cash sale, cash received from debtor. Then you have to take closing balance 1 by 1. Closing balance. You have to take whatever the opening come, same is to come. What is the first item? Stock. What's the value of the closing stock? See that. Stock 3,80,000. Stock 3,80,000. Stock is over. Then debtors. We have prepared the debtors account. Debtors. See that. How much you have got a debtor account? 2,95,000. 2,95,000. Debtor over. Stock over. Debtor over. Furniture. In the bracket old. What's the value of the old furniture here? See that. You calculate the furniture value. Furniture 1,08,000. New value 28,500. Old 1,08,000. New furniture. New 28,500. Then petty cash closing. You calculate the closing petty cash now. What's your 2,200? 2,200. Add the figure. This is 3 lakh. I think of closing stock, closing debtor, closing furniture, old, new, closing petty cash. This is 3,80,000 plus 2,95,000 plus 1,08,000 plus 28,500 plus 2,200. 8,13,700. 8,13,700. Now, stock by stock reserve on opening stock. You have to calculate 1 by 5 stock reserve on opening stock. Here, what's your opening stock is there? You calculate the stock reserve now. See that? Stock reserve on opening stock 68,000. 68,000. Then stock reserve on goods sent to branch. On goods sent to branch. I think it is 3,60,000. Goods sent to branch. Goods sent to branch. Here is 3,60,000. Then come back to debit side. Here, to stock reserve on goods returned what's the value of the stock reserve on goods returned? On goods returned, stock reserve on goods returned is 8,000. Stock reserve on closing stock. Stock reserve on closing stock. Stock reserve on closing stock 76,000. So we'll add the figure now. One by one. You go back. Here is 3,60,000. 3,60,000 plus 68,000 plus 8,13,700 plus 1,500 plus 16,68,1668 followed by 30, 16,68,000 plus 40,000 plus 3,500. So this is 3,500 plus 40,000 plus 16,68,000 plus 1,500 plus 8,13,700 plus 68,000 plus 3,60,000. 29,54,700. 29,54,700. 29,54,700 minus 76,000 minus 8,000 minus 94,000 minus 18 lakh, 18 followed by 50, 18 lakh minus 2,700 minus 1,20,000 minus 2,60,000, 260, 2,60,000 minus 3,340,30, 1, 2, 3, 3,40,000. 2,54,000 is the difference. 2,54,000 is the difference. To general profit and loss. 29,54,700, 2,54,000. Check up if you want. We'll go back. So 3,40,000 plus 2,60,000 plus 1,20,000 plus 2,700 plus 18 lakh, 8 followed by 50, 1, 2, 3, 4, 50 plus 94,000 plus 8,000 plus 76,000 plus 2 lakh, 27 lakh. Here 29 lakh, 54,700. Here 27,00700. 2,54,000 is the profit and loss account. So at the end of the year, the firm gets 2,54,000 profit. So I told you, first the missing figures are closing debtor, you have to prepare, closing petty cash, you have to prepare, closing furniture, you have to prepare, stock reserve, 100 is the cost price, 25 is the profit, 125 is the sell invoice price, 25 by 125. So the profit includes where? One on opening stock, one on closing stock, one goods sent to branch, one goods returned by. So opening stock on the debit side, stock reserve on the credit side. Goods sent to branch on the debit side, stock reserve on the credit side. Goods return credit side, stock reserve debit side. Closing stock credit side, stock reserve debit side. So whatever the difference comes, that goes to profit. So the profit of the branch, the same will be sent to head office. We solve all the types of problem. So in the next session, we'll have one more problem on the invoice page. Till then, goodbye. Meet in the next class with a good problem.